I would now like to welcome our next guest, Mr. Satish Babu. Mr. Satish Babu is the chairman of various organizations like the Asia Pacific School on Internet Governance and Asia Pacific Regional at-Large Organization. He is also the founding director of International Center for Free and Open Source Software. And he has been associated with various organizations like ICANN, IEEE, and has been an internet advocate and free software activist. And he is also an advisor to IGF India since the day one, and we're extremely indebted to him for his support. He will be speaking about understanding the emerging technologies such as AI, IoT, DLT, and also the challenges that come along with them. And I'm sure a lot of us have had questions, so I'll leave that to you, sir. And welcome, sir.
Thanks very much. I hope you can hear me.
Yes, sir, you're audible.
Right. So can you please enable screen sharing? I have a presentation.
Yeah, sure, sir.
So while I'm trying to enable my screen, I'd like to thank the organizers for this opportunity. And it's always good to see Youth IGF in actual practice. So we have been supporting Youth IGF. When I say we, I mean the India School on Internet Governance. Can you see my screen now?
Not yet, sir.
No, sir.
No? Okay.
Tavleen, Priyanka, can you stop sharing the screen? It'll make it easier. Yes, sir. You may continue now.
Done.
You've disabled it.
Okay. Just let me know if you can see the screen.
Yes, sir.
Yes, sir.
Right. So I'm going to actually focus on one particular aspect, which is cryptocurrencies, rather than speak on all the technologies, because I'll not be able to do justice to any of them. I'm sure you must have heard of cryptocurrencies. It's one of the most foremost innovations of the last decade. And it brought together computer networking, macroeconomics, and behavioral sciences, and created something as interesting as a currency. And all this is done without any central authority nor any cash reserve. This is money that is created out of the blue, just using computers. And the first of these was Bitcoin. We don't know who the creators are. And currently, Bitcoin is capitalized at around $247 billion. So this is a very tangible wealth creation using just computers and nothing else. It has taken more than, of course, a decade. It's about 12 years now. But the money is actually quite real, because most of us don't believe that we can create money like this. So today we have a large number of crypto platforms. Now, as far as governments are concerned, they have mostly adopted a standoffish approach to cryptocurrencies. For instance, in India, it is kind of a gray area. They are not encouraging cryptocurrencies. But we will see that the governments have responded in an interesting way. And we're going to talk about 3 different kinds of online currencies. I can't call them cryptocurrencies. I can't call them digital currencies. So I'm calling them as online currencies. Some properties of cryptocurrencies: they are decentralized, not owned or controlled by one entity. There are some exceptions. For example, Libra, which we will look closely a little later, is an exception. It is owned by Facebook and a bunch of their, it's an association. It's permissionless. It does not require any government ID or permission to create an account, unlike a bank where you have to produce your Aadhaar and other identity forms, whatever you use. But here, for cryptocurrency, you can simply download software and you join the network using that software, and then you can do transactions. User remains anonymous. Some of the cryptocurrencies have very strong anonymity. Bitcoin has rather weak anonymity, but in every case, the transactions are public, but the parties are anonymized. It is censorship resistant, which basically means that nobody can freeze your bank account, cryptocurrency account. It is low cost compared to banks. If you transfer money from, say, US to Venezuela, it'll take 2 weeks and probably $100 of fees, because it has to go through different banks. But if you do a Bitcoin transfer, it takes 10 minutes and it costs around less than $1, a few cents. It is deflationary because it is supposed that the money control is very tightly regulated. And generally speaking, the Bitcoin white paper has the entire life history of the Bitcoin and how many coins will be created at what time. Generally speaking, although the value fluctuates widely, I mean, the exchange rate of Bitcoin, it goes up and down. But the long-term trend is that it will gain value. The transfers are quick, quite convenient. We can carry around $1 million US in a thumb drive in your pocket. Although what you're carrying around is not actually the Bitcoin or the cryptocurrency itself, it is the private keys that can control the movement of the coins. The coins are actually on the blockchain itself. Transactions are public. And there is a programmable layer that provides a lot of flexibility, that you can do a lot of automation. And we will see some examples of what really happened because of that. So the cryptocurrencies are built around communities, because in order to bring trust in a currency, you have to have a community that trusts it. So most cryptocurrencies are decentralized, open, peer-to-peer, and free of entry barriers for newcomers. Every currency is centered around its own community. And who are these stakeholders? The normal users who are using currency for transactions, merchants who are receiving currency, investors who buy and then keep it as a kind of speculative, in a speculative manner, which actually causes the price to go up. Developers who create applications, miners who participate in proof of work. I'm not getting in details of proof of work, but it is a process that is important for the security and the trust in the cryptocurrency. The platform developers and a governance group, which is drawn from all the above categories. There are also some more stakeholders like media, regulators, and governments who do not have any direct influence on most of the cryptocurrencies. But they're also observers. They sometimes participate, they make regulations. So they're also stakeholders. In addition to all this, there are also malicious actors who want to break into the platform and perhaps steal money. So one of the most significant innovations of Bitcoin was the Byzantine fault tolerance. That takes into account that there will be a bunch of malicious actors, but our coin has to be resistant to them. So unless the malicious actors are more than 50%, they do not make any difference to Bitcoin. So far, Bitcoin itself has not been hacked. Although people have lost money, money has been stolen, but that's due to carelessness. If you don't keep a backup, I mean, the point is that all cryptocurrency transactions are between two parties. There is no third party involved, like a bank. So if you do a bank transfer from me to somebody else, the bank is in the middle, and the bank ensures that the transfer happens properly. In Bitcoin, there is no such entity. It is a direct transfer from me to the other person. Now, if I have transferred money to the wrong person, then there is no way I can get it back. There's no way to reverse these transactions. And if I don't guard my private key and my hard disk as a crash and I lose the contents, then there's no way to recover the money. The money is lost forever. So these are some of the issues. Now, the general assumption is that although there could be some conflict among the interests of these different stakeholders, it's assumed that everybody for the long term is interested in the sustainability of the coin. So if it is Bitcoin, the Bitcoin community wants Bitcoin to kind of last long and be stable and not lose value, etc. Sometimes these stakeholders may fight each other. There could be splits, and that's called a fork. It's called Bitcoin has forked several times in its history. So this is an introduction to cryptocurrency in general, but I'd like to take you through these three developments: DeFi, Libra, and CBDCs. These are the recent developments. Now, first of all, Libra. Libra is Facebook consortium's proposed cryptocurrency announced last year, but now more or less stalled because of scrutiny by several governments. It is centralized, unlike the Bitcoin or other cryptocurrencies. It is permissioned, which means in order to transact, you first have to take permission from someone. And it's a stable coin. Stable coins are coins that do not fluctuate in value. This is an important thing. Otherwise, you buy some Libra coin, keep it with you. It may lose value, it may gain value. But if it's a stable coin, it is pegged to a currency, and it's a hard pegging, and it remains. And in order to implement this pegging, they have a big sum of money, physical money in a bank, that's used to kind of stabilize the rate. The data store is a DLT, a digital ledger technology, which is a broad category of technologies that include blockchains also. There's a consortium, and consensus is based on proof of trust by these consortium members. It is likely to be easy for use. And why is that? We will see shortly why it is going to be easy to use. And it's projected as cryptocurrency for all, or the internet of money. So as a stable coin, Libra would be pegged to a standard currency, and users can buy Libra and move it to the wallet from their bank or ATMs, Libra ATMs. And once the money is in their wallet, they can use any of the Facebook family of applications, including Facebook itself, Messenger, WhatsApp, Instagram. And so these are all mostly, most of our mobile phones already have these applications. So instantly we become capable of moving the money. And it is secure, and the parties are anonymous. The consortium is the Libra Association that's got 28 founding members. The role of the consortium is to govern the Libra initiative, govern the fiat reserve. Fiat reserve is the sum of money which is there in the bank in order to stabilize the currency's exchange rate. And finally, govern the Libra open source software development. The association also was planning to have some social impact members. So these are people who don't have to shell out $10 million to join the group, but they are there to they are, for example, not for profit. Maybe, for instance, IEEE, which is a technical organization and interested in ethics of technology. So they could well be one of these partners, although nobody has been announced so far. The association also had some mutual competitors, and some of them have dropped out. So PayPal, Visa, and MasterCard have dropped out already. Now, while Libra is a very interesting innovation for most of us, because instantly we can start playing with money itself on our mobile phones, there are several concerns that are expressed. So first is that this is a parallel infrastructure not tied to any country, currency, or regulatory framework, reporting to a non-democratic corporate structure. So the question that arises in this context is, does Facebook want to become the world's private central bank? Now, central bank is a very important institution in every country. Our central in India is the RBI, Reserve Bank of India. Now, most of the cryptocurrencies are their own central banks because they play the central bank role of controlling the money supply. Now, Facebook wants to become a global private central bank. National regulators may have problems because this is the parallel economy. Local currencies may be threatened, at least in smaller countries. So this is the reason why governments are very worried. So multiple governments, so Libra, the association is registered in Geneva, not in the US. So the US Congress is now scrutinizing these plans. Now, the privacy of financial information. Now, all data is a big concern today, but financial data is even more of a concern, like health data. So Facebook will have all our payment data with them because already Facebook has some 2.5 billion users. And this is a very large, number of people. And we are concerned that this data will end up in Facebook's hands without any recourse for us. And it can easily become the world's largest surveillance machine. So data protection is a concern. Now, there are some other concerns. For example, we have to buy Facebook's Libra and move it into a wallet. But the money is in Facebook's hands, basically, but they will not pay any interest. The profits of the operations will be shared within the consortium and not with the users. So there is no monetization strategy there. It is not central, it's not decentralized, so users are not benefited. And Facebook is not really like Bitcoin or Ethereum, a proper decentralized open platform. But it is actually the idea seems to have been to become a global shadow bank. So the governance itself is an opaque process. The software is open source, but the governance of the software is not open source. It is by this closed group, and users in particular have no control over the process. The throughput currently is very low. Now, one of the problems that all cryptocurrencies face is that compared to the traditional instruments like credit cards, which process hundreds of thousands of transactions per second, the cryptocurrencies can only, as of now, process much less transactions. This is actually too low for global kind of applications, so that's a concern. Now, smart contracts, which makes this programmable layer available, which will help in automation of various things, is not available today. Some advantages are there. As a stable coin, there is no speculative aspect. The being a stable coin, it removes the speculative aspects. So you don't want to hold on to as an investment mechanism. So the large number of users, and instantly Libra may be able to provide them with financial inclusion. It may be easy to use. All these apps that we already have will become enabled, banking enabled. Then also there are some advantages to the open source community, because Facebook has already open sourced many of their internal technology platforms like React. So there could be more tools coming up. The second development that we want to talk about today quickly is the DeFi. Now, DeFi is an emergent property of cryptocurrency platforms. Emergent properties are properties that are not there by design. They just emerge from the complex interactions in a system. So DeFi stands for decentralized finance. And at the heart of decentralized finance is the fact that, unlike when I take a loan to buy my home, the documents of the home building is with the bank. So that's a custodial nature of the traditional loans. When you have crypto assets, you can have a non-custodial form of loans, wherein the asset does not leave you, but through smart contracts, if you are staking the asset and borrowing, there is a control. And the smart contracts can also trigger the closure of these loans if something goes wrong. So that makes it very secure. So people are happy to kind of give their money to a DeFi pool, which will lend for others, the same money for others, and you get interest. And currently the interest rates are very high. Some would say even they are supranormal, because interest rates are fixed algorithmically. We don't have to intervene. Automatically, depending on the performance of the platform, the interest rates go up and down, and they vary all the time. So suppose there are no takers for your loans, then automatically the system will reduce the interest rate. The third thing that we'll talk about which is also important from a governance perspective, is CBDCs. Now, after COVID-19, the BIS, this is the Bank for International, International Settlements. This is the central bank of central banks. And it creates all the kind of regulations regarding interbank transfer, all this, NEFT and, the real-time gross settlement, RTGS. These are all standards made by BIS. And BIS, basically, after this COVID crisis started out, one of the things that they said is this thing here, which is basically that the pandemic will amplify calls to defend the role of cash, but also the BIS also called for something called central bank digital currencies, CBDCs. Now, what are the CBDCs? Now, when Libra came out, most governments were very unhappy, but they could not deny the fact that Libra had a lot of advantages. For the end users, it is very convenient. You could transact using your mobile phones. And the regular banks could not do that. Central banks could not do that. Now, central banks have been talking about digital currencies. Now, these are not cryptocurrencies. These are a different thing altogether. Digital currencies are the same fiat currency that you have, like rupee in India or rupiah in Indonesia. These are converted to an online coin, which are tied to the same currency. It has the exact same value, but it becomes programmable, and you can actually then transact using your mobile phones and so on. So central banks have been talking about this sort of a digital currency since 2015. But when Libra came out, they were forced to take a position. So China is currently in the final stages of testing their CBDC. And the Central Bank of the Bahamas last week announced their CBDC called Sand Dollar. This is an app-based platform. And you can do pretty much anything that you do with an app. I mean, it's very flexible. I've taken a look at the client app. So I've also spoken to the company that is behind this. So it is an exciting development. And India has been kind of not very clear whether they're going to have. It has been, Niti Aayog has said that they would like to have their own digital currency, the digital rupee. But we have not seen any announcements. Maybe the COVID has actually put the brakes on. Although the COVID basically makes people want to do less transactions by cash, and they may prefer to do online transactions instead. So we are looking forward to CBDCs. Now, CBDCs have a very interesting property that they are a claim on central banks. Now, when you put some money into a regular bank, like say State Bank of India, suppose you put 10 lakhs of money, that is 1 million rupees into the bank does not guarantee that it will give us back this money with interest. All it guarantees is a much smaller amount, maybe 2 lakhs, because that is the way the regulations work. So we don't, if something happens to the bank, there's a run on the bank loses money, then we are only guaranteed up to this amount, not whatever we have put in. But CBDCs are a claim on the central bank. That means central bank, the RBI will never default. So what that means is that there could be, if you introduce CBDCs, there could be a run on regular banks, because people may want to convert all their rupees into the CBDC digital rupee, because that will get back whatever amount is there. There's a guarantee because it's a claim on the central bank. So this is an important difference, and people are worried about runs on regular banks. And the way to kind of adjust that is not to give interest or give a very low interest rate. So that to some extent will balance this concern. Advantages: an efficient system, a payment system for large and small users, an instrument for achieving financial inclusion, a mechanism that central banks can control precisely to manage the money supply. It's very cost effective, because the cost of securely designing, printing, transporting, and also destroying the physical currency, the paper currency, is extremely high. And the higher the total cash in circulation, these costs are actually extremely high. So by going digital, there is a significant savings, because we can scale up this digital currency much easier than scale up paper currency. And it enhances the resilience of payment system for the whole economy. It can be made interoperable with other countries' CBDC. That means if you want to do an international transaction, that could also be done. It adds this layer of programmability through smart contracts, thereby opening a vast set of services that can be automated. So, suppose you want to get all your vehicle sales, you can actually move it into the DLT, and you can transfer a vehicle simply by an app. Now that is possible through smart contracts, which is this additional layer of programmability. Provides agility, flexibility, responsiveness, and security to the entire financial sector. And finally, the central banks can counter the advantages of cryptocurrencies, such as the ease of use, flexibility, and programmability. So this is a implementation. So this is technical, but the point is that this mint controller, this one here is the central bank itself, but a subset of the central bank's roles. These are 3 payment service processors, PSPs, and these are the user wallets. We have regulators, which is another role of central bank. We have the DLT and the ID management, and so on. The future, CBDCs provide several advantages to central banks. And we expect that these will be launched shortly by several countries. This will support individual, merchant, and international transactions. And the arrival of CBDCs will result in transformative changes in the financial markets, with more financial services, including off-chain, off-blockchain, or off-DLT monetization of physical assets, or international trade. So in a sense, this is a very revolutionary change that might happen in the short term, maybe in the next 2 to say 5 years. And we can expect that there will be, we'll see its impact in every aspect of life. Now, for most cryptocurrencies, the code base, the app and the backend code, which runs on every node, directly decides all the critical aspects of the currencies, including total money supply and various other parameters, which I'm not getting into. Now, the changes to the code base can be made only by a small group of people, and this is after some consensus voting process. Now, if there is a division among these voting people, then there could be a fork of the platform. And some years back, this was proposed. The fact that code is law. Now, cryptocurrencies do not have charters or documents of incorporation. They only have code. So every aspect of the way the cryptocurrency works is embodied or embedded in code. So normally, when you have a company, we have a charter, we have bylaws, etc., which govern how the company should be run. And that is the law that enables us to run an enterprise. But for cryptocurrencies, there is no such thing. There's no document. There are some white papers, but those are not binding. What is binding is the code itself. And so we say code is law. So we see three different governance models here. The first is that the Bitcoin model of governance, which is open, decentralized participation with community governance. Second is the Libra model of centralized, opaque governance by a small group of entities. And third is the CBDC model of central bank digital currency. Now here what happens is it's a government policy which is translated into the CBDC's parameters. So these are three ways cryptocurrencies are managed. When you look at the broader question of how emerging technologies are managed, there is both the open source model, where the entire governance process is open source, which is a way open. I mean, anybody can theoretically participate, which is what happens in the case of some of the cryptocurrencies. And the reason for this is that the initial cryptocurrency was started by an individual or a group that firmly believed that they did not want governments, that they did not want governments to control their banking or currency. And they were actually quite, they had very strong reservations about current governments. And it is to be noted that 2008 was the year there is a financial meltdown in the capitalist countries. And this was seen as a response to keeping governments out of the citizens' financial activities. So that is the reason why the governance is very open. But if you take AI or ML, the problem there is that there are these large corporations, because AI and ML, the main constraint is not code, it is data. In order to create a viable AI product, you have to have a lot of data. So that is a constraint. And it is, although the code may be open source, the data is not open source. And the data is very precious, and that is what decides on the governance. So cryptocurrencies have come a long way from the initial launch in 2008. Each cryptocurrency is in effect its own central bank and carry out many roles of the central banks in their implementation. And the code does all this. And what is to be remembered is that it is not a code sitting in some backend computer. It is the collective code of all the front, I mean, all the client side of the, like Bitcoin. If you look at Bitcoin, you download a client into your laptop and run it. And then that client makes your computer become a part of the overall peer-to-peer network. There is no backend. It's only so many peers. So it's interesting that the collective, the way the whole system works is by all these individual nodes running in parallel, communicating with each other. So it is actually, that aspect is, unlike CBDCs have a very different model, they are centralized. So there, everything, there is a backend, there is a front end, the mobile is the front end, etc. So these are actually very different models. Now, originally, cryptocurrencies were not considered as something that would make any changes to the government or any impact on the governmental central bank system. But we have seen that cryptocurrencies, original first wave of cryptocurrencies led to the creation of Libra. With Facebook's massive size and the number of users, they could actually create a massive change to some of the governments. So the governments were then forced to respond through CBDCs. So although initially there was no link like this proposed, finally, cryptocurrencies have actually impacted the way governments work. Now all these three models of the governance of these cryptocurrencies are likely to continue into the future. And it is very clear that together, all these three models, if Libra is permitted or allowed to operate, will transform the role of money in the economy and society and make it easy or easier to and more flexible to hold, transact, and move money. For instance, you can have using your mobile, you can set a standing instruction, pay so much of money to this account every month. Or if something happens external, for example, the stock market, Sensex, crosses 45,000, then do this. So this way you can, make a lot of automated, financial transactions happen. So in that sense, it's very exciting. And although we do not know how India's own CBDC is going to come out, it is also likely that each country has its own implementation, its own differences. Now, in the case of Bahamas, one interesting thing about their sand dollar is that Bahamas is it's a bunch of islands. They are often hit by hurricanes, which brings down power and internet and all that. So one of the design aspects of the wallet was that this should be able to work without internet. The transaction should be able to work without internet. Now, what they have done in order to kind of support this requirement is that they have said, in case of a network failure, up to a certain so many dollars, Bahamian dollars, you can transact without the internet. And once the internet comes back, all these transactions will be synchronized with the backend. So we have to be creative also, because this is money, and money has to be resilient. No matter what, we should be able to provide the facility for people to transact. Right. So I will stop here, and I'll be happy to take some questions.
Sure, sir. Thank you so much, sir. You rightly pointed out, especially this pandemic has shown us how quickly, what it takes to really get into a new normal. And I'm sure that cryptocurrency will be playing a really important role within whatever world order develops post this. And, you've given us a very good heads up as to what it entails in terms of the technical and the infrastructural aspects of it, as well as the governance and, what society will look like very soon. I'll just quickly pick up two questions, maybe from the chat. So Dr. Abhishek Bhatia has asked, if cryptocurrency adds no value to economic output and GDP of the country in terms of transactions, why does it exist? And what value is it serving, and to whom?
Now, it does, of course, have a value, and it does add to the economic transactions. But the point is that it is not getting reflected in the national accounting. Now, if you, because India, in case of India, India says it doesn't want to promote cryptocurrencies or even encourage cryptocurrencies. Now, if you take a different country, say Japan, where cryptocurrency is freely available, those transactions get reported in the national accounts, and they also pay taxes. So the government is actually getting money out of it. So, but if you simply say that you cannot transact in cryptocurrencies, the problem is that people still may be transacting, because it's not easy to kind of find out whether people are doing this transaction or not. So currently, the control that the banking system has on cryptocurrency in India is at 2 points. That is, when you physically convert from Indian rupee to cryptocurrency, or when you convert from cryptocurrencies to Indian rupee. So AML, that's anti-money laundering laws, they have insisted in every country actually that any cryptocurrency exchange that converts into Indian rupees must report to RBI this conversion. So, and they are also forced to adopt KYC information, that is, identification, Aadhaar and others. So, when you convert from and to cryptocurrency, the bank is aware, central bank is aware. But when you transact, they don't know what you're doing with it. Sometimes they also don't know how much money you have, but they will know only when you convert. So in summary, I would like to say that the transactions do make a difference to the national economy. For example, if there's a hotel that accepts money in cryptocurrency. So there are actually many places, many countries around the world, there are these services. Airlines take cryptocurrency, hotels take cryptocurrency, shops take cryptocurrency. So they're all kind of accounted properly. But in countries where this is banned, the transactions might still happen, but they may not get counted.
Right. So on a related note, Gautam Mishra has asked, so with our government trying to regulate or looking for ways to control cryptocurrency, is it going to affect the main feature of the currencies like you've mentioned, which is decentralization and anonymity?
So in the case of countries where cryptocurrency has been legal, the government is aware that they cannot exert any control on the currency itself, because the way Bitcoin is designed is resistant to any governmental intervention. So they can at best control it when it gets converted into their currency, their fiat currency. So the government, in short, the governments cannot do anything except by banning, of course. You can do that. You can ban cryptocurrency and say nobody should use it. It is not enforceable easily. So that is why, I mean, the reason why India is banning is twofold. One is because the government has no control over it. The second is that the government is also afraid that there are so many scams in the name of cryptocurrency where citizens are going to lose money and they're going to have problems because the police cannot enforce anything with cryptocurrency. It's completely beyond them. So the legal system, the law enforcement cannot then, if there's a dispute, they cannot do anything. So the government is trying to avoid that situation. Now, what should be also stated is that although a lot of people have lost a lot of money in scams called Bitcoin scam, India, there was about 3, 4, 5 years back, there was a big scam wherein one lady from Europe, she's called the vanishing crypto queen. She walked off with about $4 billion worth of cryptocurrency. She floated a currency which had no blockchain, which had no currency, but she was a very magnetic personality, and she managed to convince people through an MLM kind of a tactic. A lot of people collected money, even in Bombay, even in Kerala, in many places, and all of them lost the entire money. Although that has nothing to do with the Bitcoin, it's not related in any way. So these are some of the related issues.
Right. All right, sir. We have actually a lot of questions in the chat, as you can see, but in the interest of time, would it be possible if we email, we've been documenting the questions very carefully, would it be possible if we email them to you and then you could maybe get back?
What I would suggest is that you put it in a Google Doc so that everybody can see
Sure.
it.
Sure.
Then put it in a Google Doc, and then I can go to the doc and add my answer there. Sure, sir.
Sure, sir. We'll do that, sir. All right, sir.
Thank
you so much. It's truly been an enlightening morning with you, and a lot of questions, a lot of answers, and a lot of things to ponder upon even later. So thank you so much, sir. Thank you once again. I would now like to hand over the session to Alan, who will be Alan and the rest of the team, who have a very interesting way to go about an interesting activity where we will all be looking at understanding the life cycle of data